This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. It's an important day. Today was supposed to be a market holiday. Of course, it's now tomorrow. Global cues are looking good. Market momentum picked up yesterday. And once again, I think market players are waiting to see if the market has got enough strength to take out new all-time highs. I'm Prashant. With me, my colleagues Reema and Nigel. Morning, guys.
Hi, good morning. Promises to be an exciting day, right? If the SGX Nifty is suggesting a 50-point bump up, we're going to get pretty close to our all-time high levels.
Yeah. I mean, last time we got to within 1 point, right? So, I think...
And finally, I can say I'm getting the Friday feeling, right? Because tomorrow is going to be a holiday.
Unless they do something again, right? Which is unlikely. I'm just joking. I mean, let's just quickly tell you what you need to know as we begin another trading session. As I said, I mean, momentum picked up. And this is the point that we were making in the morning yesterday. A defense of 20-day moving average, and then what the market does. I mean, does momentum pick up? The way the sort of price action pans out, is it slow, lethargic, or, I mean, do we see some momentum in the market, basically? That will determine whether there is enough sort of in the tank to take the market higher, even higher, in a faster way. So we defended the 20-day moving average, exactly the 20-day moving average, by the way, twice, especially last week. And then now, yesterday, we climbed above the 61.8% retracement of the pullback, the recent pullback, the short 2 or 3 day pullback that we saw. So that puts us in a pretty comfortable place with bulls in control. You got global cues, which are very supportive overnight. And, a lot of people were saying that the semiconductor index is the one which will break down first, because that's where a lot of the rally year to date has happened within the Nasdaq. That went up almost 4% last night. So, Nasdaq itself was up 1.6%. The S&P was up about 1.15%. That's a broader index. So U.S. markets, once again, have re-accelerated, if anything, after showing signs of dithering, pretty much like what we've seen here in India as well. So very strong U.S. data. 3 data points out of the U.S. all beat expectations. This is, high-frequency economic data, durable goods, which beat expectations, housing, which beat expectations, and consumer confidence, which beat expectations as well. So the U.S. economy, as this data suggests, as we heard from a Fed chair at the time of the Fed decision, at the time of the pause as well, remains, in a very good shape. That means that perhaps rates are a little higher to go. We'll get to that in a bit. There are views which are changing as well at the margin. Those who were expecting a pause for the next couple of meetings are now saying that maybe one more hike, maybe 2 more hikes, just like what the Fed indicated. Now, oil prices are down to $72 a barrel. That's great news for lots of companies. I mean, airline companies like Indigo did quite well yesterday. Watch this for more. And of course, just to put everything into levels as we start the session here, the Nifty is eyeing all-time highs. That level is 18,888. We got to within 1 point of it, as I said earlier. Beyond the all-time high, once we cross that, the next target is the upper end of the channel, the rising channel, which stands at 19,190. Just putting it out there. Let this all-time high first come, and then we'll talk about what happens beyond that. On the way down, I mean, I think the 20-day very naturally is the support level, which one needs to be cognizant of, which is at 18,681. Strong defense of it for the last 2 or 3 sessions now. The Nifty Bank, by the way, which had broken below the 20-day moving average yesterday, climbed above it. And that's the reason why I'm saying that maybe banks are also starting to resume a bit of an uptrend. They've got this tailwind now. For the Nifty Bank, the level which we were watching was the 40-day exponential moving average, which is basically going to be the support. That stands at 43,541. So that's not been broken, and I think that a defense of that will continue to sort of make people look for upsides on the Bank Nifty as well. But it's very positive that the 20-day has been regained on the Nifty Bank. For the Nifty Bank, on the upside, the all-time high stands at 44,500, 44,499 to be precise. And that's naturally the target which one will eye out for. Tomorrow is a market holiday. But, generally the sentiment is pretty upbeat. There are views coming in which are advising caution, moderation at the margin. But, momentum is a is a very different beast out there. And right now, it seems to be coming back in the market like what we saw yesterday. SGX is indicating about a 45, 50-odd point higher start. Rima.
On Friday, you also have the quarter end and half year end, and typically globally at least, there is a lot of rebalancing which takes place. And next week, it's going to be a truncated week for the United States because they've got that Independence Day holiday as well. But back to our own markets, the much needed thrust came in from the HDFC twins. And look at the delivery volumes yesterday. Both of them, HDFC Bank and HDFC Limited, saw delivery volumes of nearly 1,500 crore rupees. Today is the June series expiry. In terms of flows, the DII outflow netted the inflow from FIs, roughly 2,000 crore both ways. And an important cue for today, there is a SEBI board made. It's scheduled in the evening, but will there be a change, any relief in the total expense ratio? That's something the mutual fund industry will be watching very, very closely. But it's the HDFC twins, right?
Well, that's right. You know, Rima, when we were growing up, every time you struggled with something, mom kept saying, right, good things take time. So maybe this good thing that we're waiting for the all-time highs, well, it's taken a little bit of time, but I guess today is the day out there. But let's not talk too much about that. Let's focus on the markets. Yesterday, the markets were looking for a trigger, and the bulls have been looking for some kind of a trigger. And that was provided because there is a hint that, in fact, yes, the HDFC merger is pretty much on. And we'll have just one entity in the next couple of weeks or so. And that's what led the Nifty as well as the Nifty Financial Services Index higher. And as we know, yesterday was a weekly expiry that played out for the Nifty Financial Services Index, which has HDFC Limited as a big weight in there. The ingredients are in place for a super end to the June 2023 series today. You had a solid close in the US markets. Crude is a little bit lower. And you have dollar index as well that's a little bit softer. You have a close yesterday from the Nifty above that 18,800 odd mark. That gives you a bullish bias to kickstart trade today. And the India VIX, well, it ended at its lowest levels we have seen all the way since December 2019. So maybe getting a little bit complacent, but in the near term, well, that's a very, very bullish indicator as well. What do the FIs do? Well, it doesn't get more bullish than this from the FIs. Yes, we are missing their shots, in the system, but now they've gone full hog. On the final day of a series, they buy more than 40,000 long contracts. That's in a ratio of 7 longs for one short position. And there was a lot of buying in the Nifty Bank futures as well. So that's telling you that the Nifty Bank could lead from here on. Even on the stock futures, the FIs added big long positions while they covered some shorts on the stock futures as well. Very, very bullish signals coming in from the FIs as well. And call writers, they have got taken to the cleaners yesterday. And I think there could be some more in store even today. The Nifty call writers, well, big unwinding being seen out there. The Nifty Bank call writers as well, that as well should come up for you. They're looking at defending higher levels, 44,000, 44,100 odd, but they got caught on the wrong side. So you have to stay long in this market. If you get stopped out, so that is the case. But in the near term, you need to stay long. For the Nifty, well, you look at the 20 DMA as the near-term support zone, and we have seen it bounce out those levels. So that's the reference point on the downside. And for the Nifty Bank, it broke out yesterday after 14 sessions of being in a bit of a consolidation phase. Yesterday, you had the highest close in the last 14 sessions. The 20 and the 50 DMA, well, they'll be support zones on the downside. SGX Nifty suggesting a gap up. I think we build on from here, and the scenario is set. We could have a finale and a very, very good expiry that will play out. Let's see whether or not that does happen. But the ingredients are in place for a blockbuster expiry date.
Well, that is absolutely the case, and we'll watch that closely. Well, before we go any further, let's quickly tell you what's lined up in the first half hour of the show. We get you updates from markets across the globe. We have Foo Keen Yap of Standard Chartered Bank who will join us to discuss the global trade setup. Our research team gets you the top 10 stocks for the day. And we quickly do a fundamental stock check with Deepan Mehta of Elixir Equities, who will join us at 8:30 this morning.
On the equities, Alexander Redman of CLSA says India underperformed the APAC regional equities by 25% from October of 22 end to end of March this year, before clawing half of the lost ground in Q2 of 2023. They are now less concerned about half of the 10 reasons cited for the 40% underweight stance in CLSA's November 2022 report. However, they still remain cautious for now, given the exceedingly rich valuations, margin erosion depleting India's relative profitability, consensus EPS growth expectations remaining too optimistic, the RBI likely lagging EM central banks in timing and scale of policy easing, and CLSA's econometric model signaling the market is 14% overbought.
Okay, we've got another opinion. This is coming in. This is a global opinion again. Ellen Zentner of Morgan Stanley, who's the chief economist, says that the bar for a July hike out of the US Fed is significantly lower than they had initially expected and have now added a 25 basis point hike to their policy path. The revision is a level shift upward to 5.375% Fed funds by 2023 end and 4.375 by FY24 end. Morgan Stanley continues to see a soft landing, staving off rate cuts to next year.
Let's get some money market views then. We've got Indranil Sen Gupta of CLSA reiterating their call for rupee appreciation to 80 against the dollar by March 2024. He says this should be driven by weakening US dollar after the Fed pauses at 5.5%. Second, he adds the current account deficit should also come off to 1.5% of GDP in FY24 versus the just released 2% for FY23 as oil prices come off. Finally, he says adequate forex reserves of $600 billion plus should reduce the RBI's urgency to recoup the forex reserves. Indranil says the balance of payments estimate suggests that it should be able to avoid selling forex in FY24 in contrast to the sale of $65 billion plus in FY23.
On bonds, Neeraj Gambhir of Axis Bank says the 10-year benchmark bond traded in the range of between 7.05 to 7.1%. Hawkish central banks kept pressure on rates, with Bank of England and Norway raising benchmark rates by 50 basis points. Data, however, remain weak, with Eurozone PMIs coming softer, bringing the yields lower again. Neeraj says going forward, market will continue to watch auction demand and system liquidity is expected to trade in a narrow range. He expects the 10-year benchmark bond yield to trade in the 7 to 7.1% range for the rest of the week.
Well, we'll be eyeing all-time highs, but we have a lot of stock-specific action that we're tracking for you, and we'll get to that in just a wee bit from now in our special Top 10 segment. For the time being, we run you through the list. HDFC, HDFC Bank, HDFC Life, Sapphire Foods, Orchid Pharma, well, and the list goes on. Titagar, Real Systems, you have Gland Pharma, Ramco Cements, as well as TCNS Clothing and BSC.